Welcome to LAUTECH Open and Distance Learning Center lecture series. This is ACT 202 Financial Accounting 2, and I'll be taking you through study section 1, that is incomplete records. Introduction. Accounting records that are not kept according to the double entry system are known as incomplete records, though some may refer to it as single entry system. This is an incorrect or unsuitable name because there is no system as defined as a single entry system. Hence, it is not a shortcut method as an alternative to the double entry system. At the end of this study session, you should be able to state the meaning of incomplete records and the reasons for keeping such records. 2, you should be able to prepare accounts from incomplete records. And lastly, you should be able to prepare profit and loss accounts as well as balance sheets from incomplete records. Meaning of incomplete records. Incomplete records are defined as accounting records that are not kept according to the double entry system. Reasons for incomplete records. Incomplete records may be due to partial recording of transactions, as in case with small shopkeepers such as a recharge card seller and vendors. And in case of large-sized organizations, the accounting records may be rendered to the state of incompleteness due to natural calamity, theft, or fire. Other reasons are: 1, lack of knowledge about the double entry system; 2, deliberate omission to maintain records to take advantage of taxation; 3, inability to maintain the business transactions because of time, effort, and costs that are involved; and lastly, loss of records due to fire, theft, and natural calamity. Preparing accounts from incomplete records. The problem often faced in preparing accounts from incomplete records is how to ascertain profit or loss for an accounting year and determine the financial position of the entity at the end of that year. However, this problem can be solved using either methods. That is, 1, ascertaining the profit or loss by preparing the statement of affairs at the beginning and at the end of the accounting period. 2, preparing the profit and loss and the balance sheet by putting the accounting records in proper order. Ascertainment of profit or loss by preparing the statement of affairs. Under this method, the statements of assets and liabilities at the beginning and at the end of the relevant accounting period are prepared to ascertain the change in the owner's equity at the end of the accounting period. And this is followed by the statements showing the ascertainment of profit by analyzing the non-operating changes in the owner's equity. The statements so prepared then show the assets on one side and the liabilities on the other side, just in case of a balance sheet. And the difference between the totals of the two sides is known as the owner's equity, and this can be expressed as shown above. We have assets to be equal to liabilities plus owner's equity, and making the owner's equity the subject of formula now, we have owner's equity to be equal to assets minus liabilities. Preparation of profit and loss accounts and the balance sheet from incomplete records. In some firms, detailed information may be available about business activities if such details of accounts payable, purchases, cash received, sales, accounts receivable, bills payable, cash payments with cash summary of transactions are available. It may be possible to work out some of the missing figures by using the logic of the double entry system of accounting, and this in turn will help in the preparation of the profit and loss account as well as the balance sheet. I hope you had a wonderful time listening. Thank you, and see you in the next session.